Well, here to help our investment pros, Jim Frischling, president of NewOak Capital, is here. Jim, does it slow down investment then? Because people might say, like, hey, we don't need to do fracking anymore. We don't need to worry about this independence because it's so cheap anyway.
Well, look, I do think you made a point about the double-edged sword. And we are a consumer-driven economy, so the first wave is a huge benefit, and we've seen it throughout the holidays. But as Oliver pointed out, for certain states, certain areas, and look, there are some geopolitical risks that concern me when I think about Russia, Venezuela, Iran. Their dependence on oil is overwhelming. So when people ask me what could go wrong or what could derail this market in 2015, well, I'm not putting a high probability on it. I do think as oil, which has not found a bottom, this is only partially a demand issue. This is mostly a supply issue. So I still think we're going to have to see this thing play out, and I'm not ready to call the bottom of oil anytime soon.
But when you name these countries that are so oil dependent, are you saying if they're so kicked down in the gutter that they're going to become more aggressive militarily? Is that the implication?
I'm saying that I think conflicts initially in their own countries, and then the question is what happens in their neighboring countries. But I do think the three I've mentioned, this is nearly a breaking point for them where oil is headed. And look, the Saudis are trying to flush out the marginal players in the U.S. Hopefully that's no one in Texas, but it might be some. And they're also trying to flush out their direct competition, and they can afford to do it where the other countries I mentioned cannot.
Well, I think 80 is probably a great number for Texas, and even 70, a lot of people can still make money in it. And when we start wondering if we're going to get to 40, that's really where the concern comes.
I'll take 2 barrels for 80 or 40, as you just highlighted. But no, I actually do think low prices will help stabilize oil, because at a certain point it becomes uneconomical, as you commented on, to drill, and you're better off leaving it in the ground. And I think that will actually curb. I hope.
But I like what you said too about Russia. I read a blog post which said Putin basically fired his whole economic team, who told him, listen, you cannot price oil at $100 a barrel. You can't do your GDP estimations on that. And he said, okay, you're fired.
I guess it's don't disagree with it. But this is we talked about Apple last week, and I actually am glad to hear they pulled back from that failure comment. I thought that was a very aggressive word, considering in this environment.
Well, he's saying he didn't say that.
And I'm glad he corrected them, because yes, the iWatch is not going to be like the phone or the iPad, but the fact is it is going to have a market. To Matt's point, wearables, whether they're on your wrist or in your ear.
The idea is pay too, yes. Right? Apple Pay, the fact that they already went out, they took these partnerships with the credit card companies. So the idea is you just go through a shop and you swipe and you're done. And
I just think right now in technology, we're in an environment where bigger may very well just be better, safer. Whether it's a Google or a Microsoft, and clearly an Apple, where they can defend their position by buying or acquiring, as Apple just did with Beats, which I think is going to be a monster play for them in 2015.
Well, people have said that was just done because Jimmy Iovine, basically he calls anyone in Hollywood, any music producer, that person picks up the phone. That's reason enough to pay $3 billion.
And actually, I'm not going to assess the value of that, but I'll say I agree
well, relationships still count.
They matter, and watch the earpieces really take off even further in 2015.
Well, you're not going to repeat that.
Shareholders are asking her to return the money. Start paying, giving it back to shareholders. So I do think she's looking for a play, because it's either give it back and adhere to the shareholders, or make a big play. And CNN or Scripps, with CNN, it's about bundling their
or even
services.
AOL, that's come up.
Bundling their services, a distribution channel, a better chance at being a Netflix-like company if they can go in and out of, again, the cable market versus their own. But the fact is, it is to Oliver's point, it's not clear to me what they want to do, and I wouldn't. And
actually, she has. There was one proposition I heard that I read actually about this idea that Silver Lake basically just comes in, dismantles most parts, and sells it off.
I certainly I've heard at least about the two-part breakup, which is again spinning off the whole the Asian operations and entities versus their U.S. But again, Silver Lake, I wouldn't bet against Silver Lake.
Or even Alibaba coming in and just buying it to have an official U.S. presence.
I could see it, but again, they have a lot of cash to spend, and I think they are going to spend it. Yes. I think Matt made the point about Hail Mary. I think she's going to throw it.
I don't think it's the right choice, though, just to be clear.
I didn't endorse it. But I think expect to hear an announcement out of Yahoo.
It just will happen. It might not be the right move. It will be a move. Well, the only reason to go public these days is if you want to buy another company that happens to be overseas, and you kind of need this legitimization of your brand and M&A capital, right?
Right.
Right.
No, I agree with your point. I was going to say in 2015, I think there is so much capital available to these companies without going to the IPO market. I wonder if it actually might be a little less of a euphoric year in the IPO market than people are expecting. Some of the companies that we were talking about are actually operating illegally in a number of cities, states, and countries. Whether it's the
do you want to cough and just say Uber? Is that what's going on?
Uber, even Airbnb and whatnot. So yeah. I sometimes get a little confused, I admit, by just the valuations on these guys, despite the fact they're operating again illegally.
So I think you're both.
Your dream team, right, that you've promised. I mean, they have equity, but they cannot work. They can't pay their own bills with equity forever.
Yeah, exactly.
And to Oliver's point, there are a number of early investors in these companies, major institutional names.
They want their money out.
They want their money. They want the return.
T. Rowe Price, Fidelity.
Goldman Sachs,
this isn't a hobby for them.
This is they're going to press to.
And they're not concerned about the long-term regulation.
I mean, as far as Dodd-Frank goes, right? I mean, you spent a lot of time in the banking system, as did I. So you know that there's a lot of banking execs who even say, I actually wouldn't mind following the regulations. I just don't know what they are.
And I think it's uncertainty is the word that Clinton used. I think is most appropriate, because if you don't know the rules, you don't know how to implement them.
Well, you can't build your business.
Then you can't build your business around it. Also, it's hitting players kind of an unequal manner, meaning the small players, or rather, I should say, the largest players can afford to build the type of infrastructure to deal with the greatest regulatory changes we've seen probably since the Great Depression.
So basically, you're saying if you can't afford a lawyer, that's $2,000 an hour, you're out.
But smaller firms are feeling this pain significantly to try to keep up. And I think, I think about Obamacare, for example, and the cost of healthcare went up dramatically in anticipation of the law. And now once it became, once it was established, we were able to adjust our business and make it work. So again, we're going to hire because our business is working, but during that uncertain period, it makes it very difficult.
But I would say
also a new dog. That is to say, a new law for dogs. So folks in the Golden State can go to dinner with their dog, but only at restaurants with patios. How many dog owners are among you?
Dog.
Wow. All right. 75. Matt.
I can't take care of a
Guess
dog.
what we're getting you? A box with holes. Yeah. I was going to say. So, I mean, what do you make of it? California obviously is a big part of our country. Does any of this strike you as important from an investment point of view?
I mean, my only observation, and I did not look at all 900 plus laws, but the dog one, interesting enough, I think is very pro-business. It lets a business actually focus on a target audience. 3/4 of the panel have dogs. That would be interesting to me. Many of the laws I perused, I guess, all actually cost business more money.
Actually, they do have one great one, which allows military spouses who are licensed out of state to actually carry their license over in California when they're deployed there, which is great for the military, great for business, too, to be able to.
And that was my opinion overall when I kind of, again, looked through it. It's going to cost more money.
Yep.
These laws, it's going to cost taxpayers more money.
Generally, that's most regulations at this point. I mean, we're an economic
company.
But California is becoming a kind of a more difficult state to operate a small business in, and that's why they're losing business to some of their neighbors.
Sure.
And again, I'm not sure these changes actually are going to turn that.
I would suspect they won't.
These are all be great
so you
for
own
Texas.
a few restaurants, don't you?
I do.
So are you allowed to let people have their dog? Do you have patio space?
We do have a patio space, and I will tell you, and we're not allowed to do that today, but I would embrace that change because there is I would say, a huge audience that would very much like to dine with their pet, and I think they'd actually be willing to pay premiums. In fact, the story I read in California was that they're actually devising a menu. So while you're eating, your dog can actually have some special things. I would just like the flexibility.
All kidding aside, this is a $60 billion per year market in North America.
It is massive. I mean, people would like to
I can't
spend
wait
on their pets.
to have my beer and my burger and a Fido slobbering all over my shoes. That's not what I want.
Right.
Once I have
You
that.
can't be that
go
grouchy.
inside.
Yeah,
And that's the beauty of it. You could go inside, or to Deer's point, you could go to another restaurant if I felt that my restaurant was better suited.
Actually, we're just going to all pull together and get Matt a little late holiday.
In the housing boom, in part, to your point, Oliver, about keeping up with the Joneses, did people stretch too much even in their home? I mean, the home purchase. Of course they did. The American dream of owning a home, it wasn't necessarily owning a 4-bedroom, 2-car garage home. And I think people did stretch. When the collapse happened, and that's why we see this disparity now between the uber wealthy and this upper middle class, the housing market got hit more. The stock market has come back.
That's a good point.
Has come back far more aggressively than the housing market. And that's why I think we're seeing this huge gap.
And the other part is that
Jim, I'm going to start with you because I know you have a restaurant business or two on your name. What do you think of this?
I think it's very exciting. I think it's exciting for Shake Shack, for Danny Myers, who's truly a best-in-class player. I mean, indicatively, looking at some of the initial numbers, it does seem that it's coming out at what might be deemed to be expensive. They're comparing him very quickly to a Chipotle and other types of fast food casual chains that actually are a little more upscale. But he's got 62 stores. He's barely scratching the surface. And what he's uniquely found is there is an appetite or there is demand for the better burger. And what he can do with this thing.
It's like Pat LaFrida beef.
Yes.
It's all high quality.
Yep.
Everything's high quality.
And I think he can do an awful lot with this. So I wouldn't want to bet against Danny Myers. And I think it'll be an exciting thing to see what he does in terms of his expansion.
But I think if you're,
It's going to be a pretty pricey IPO, I think.
It's going to be pricey, but he's created a unique brand already, and I think arming him with $100 million to help grow it. Again, I think it's going to be a really exciting story to watch.
and it's an international name.
I mean, I certainly like it, and certainly they're being recognized by market players as being very valuable. I always get a little concerned on the social side of this business, which is who's buying my groceries and what's my confidence, and when something goes wrong, what is the recourse?
Right.
Well, how quickly will I stop using it? I know people have stopped using Uber for a variety of reasons. So again, I think it's great. I love that they're creating jobs. I just worry about, again, the credibility or maybe the ability to execute consistently.
I love this.
You got to be unique to cities, and so you're limited in your expansion, and so you want to be careful there and think it through. And as Jimmy pointed out, you know, if something goes really bad in one of those cities, the repercussions are potentially devastating for a business like that.
Yeah, especially
It's a pure reputation.
Cravings. I know what we're craving and when we're craving it. But look, I certainly think it is an exciting business. So my only concern of
Would
caution.
you want to see metrics, though? For example, like you have to order $50 worth of goods, or else we're not calling somebody.
I mean, I don't want to be the Scrooge or the Grinch on this one, but I want to see a little more institutionalization on it. Meaning, what happens when something goes wrong? What is the recourse? How do they fix it? I know with Amazon, the fact is that the corporate side of it is so efficient that I do give them a lot of business.
And Google is sort of trying this out in a couple cities. San Francisco's.
And how much more must they have to charge to pay $25 a person?
All right. Well.